our group will present about our project 1, which is all about consolidated. For question 1 will be presented by me, Izati and Farah Nabiha. Question 2 will be presented by Aida Nurina. Question 3 will be presented by Alia Kistina. And question 4 will be presented by Hamizah Aminin. Question 1. 3 reason appropriate accounting method for Mercury to record the investment in Venus and Mars is Venus and Mars Berhad considered as subsidiary since Mercury Berhad has control 70% and 60% respectively. Okay, the method to record the investment in subsidiaries is by using a acquisition method. The acquirer will record the cost of investment under this method initially at cost, which will be the consideration transferred. Next is subsequently, the investment can be accounted for either at cost or accordance with MFRS 139, Financial Instruments, Recognition and Measurement. The company's financial result, they are consolidated on a single set of statements. Internally, the parent is free to treat the subsidiary as a completely separate entity, but it must have consolidated its finance in statement prepared for outside observe, such as banks, regulators, and potential investors.
Okay, so the first one is to calculate the goodwill. Okay, both of these goodwill is measured at the proportionate share. The NCI for Venus is 40%, then minus with the fair value of net asset of DOA. Then we minus also 5% impairment, and amount obtained is transferred to the statement of financial position. Okay, next, NCI for Mars is 30%, then minus with fair value of net asset at DOA, and we got bargain purchase, then transfer it to the statement of profit or loss.
Okay, next we move to calculation part. This is our schedule for GRP, GGR and NCI. Okay, for the schedule equity, we divide into 3 columns, which is GRP, GGR and NCI. First of all is a retained profit from Mercury. Mostly the figure we got from the additional information, but the impairment and bargain purchase, it took from the goodwill calculation. As we can see, the amount impairment 12,000 should be minus and bargain purchase 700,000 should be add. For the PSD 40,000, get from preference share dividend payable Mars, which is Mercury Hall only 40%. Then after that, for the retained profit of Venus, we can see the total retained profit is 4,200,000. HC share 60%, which is the figure is 2,520,000, and NCI shares 40% consists of 1,680,000. Lastly is RP for Mars. As you can see, actually we get negative figure and automatically HC and NCI share a negative profit. For RP Mars, HC share 70% and NCI only 30%. After that, we move to general reserve. Here is an adjustment of bonus issue. We already credit in calculating goodwill of Venus, so here we only debit it. Finally, the total should be transferred to SOFP for GRP is 19,680,000. For GGR is 3,760,000. And last for the NCI is 5,665,000.
Here is our statement of profit or loss. We portion the figure of Mars in 6/12 since Mercury started the acquisition of OAC of Mars on 1st July 2017. For the finance cost, it is already included in the interest debenture. The impairment of goodwill should be deducted and the bargain purchase should be added to calculate the profit after tax. To calculate profit after tax attributable to, we should calculate the NCI figure, and then the HC figure is just balancing figure after we deducted the total of profit after tax. Okay. Okay, so here is our consolidated statement of changes in equity. Okay, there are three columns which are GRP, GGR, and NCI. The balance CD is obtained from the schedule. Then we calculate backward so that we can find the balance BD. It including the figure of the profit for the year, the acquisition, the dividend paid, and transfer to the OSC.
Then, this is our soft P. This is the soft P for Mercury. In NCA, goodwill is get from calculation of goodwill. In current asset, for the bank, actually we minus the CIT, which is RM 200,000. So the total asset and balancing figure we got 61 million and 63,000. For equity and liability, in current liability, OSD payable and PSD payable we abstract from the statement, and plus minus the adjustment that we made before this in the additional information. And last but not least, we got the same total and balancing figure, which is 61 million and 63,000.
Question 2A. Under MFRS 11 joint arrangement, the area covered by the contractual arrangement, which is first, the activity duration and reporting obligation of the joint arrangement. Second, the appointment of the board of director or equivalent governing body and voting right to the ventures. And third is the decision-making process, matters requiring decision by the parties and the required level of support for those matters. 4B, according to MFRS 11 joint arrangement, joint control exists where the parties contractually agree to share control and decision about the relevant activity of the joint arrangement. The party have to assess the extent to which the party should act together to direct the activities that significantly affect the return of the joint arrangement. Okay, for example, joint control can be seen when company D, E and F are parties to arrangement where D have 40% voting power, company E and F is having 30% voting power. The contractual agreement between the three is that at least 80% of voting rights are required to make decision about the relevant activities of the arrangement. Okay. In this case, all three have joint control as all three have to agree of all decision. Okay. For C, there is two types of joint arrangement, which is joint operation and joint venture. Okay, for joint operation, the party to the arrangement have right to the asset and obligation for the liability relating to the arrangement. Okay, for joint venture, the parties to the arrangement have right to the net asset. It is the separate entity that have the right to the asset and obligation for the liability relating to the arrangement. Okay, related to right to the asset, okay, for joint operation, the parties to the arrangement share of interest. For example, right the or in ownership, the asset relating to the arrangement in a specific proportion. Okay, but for right to the asset for joint venture, the asset brought into a arrangement or subsequently acquired by the joint arrangement are the arrangement asset. Okay, the parties have no interest, for example, no right, no little of ownership in the asset of the arrangement. Okay, for obligation for the liability, for joint operation, the parties to the arrangement share all liability, obligation, cost and expenditure in specific proportion. But for joint venture, obligation for the liability, the joint arrangement is liable for the debt and obligation of the arrangement.
What is the relationship between Lily Berhad and Barry Berhad before and after the rights issue? So before the rights issue, Lily Berhad acquired 600,000 out of 800,000 of Barry Berhad's ordinary shares, which means Lily Berhad holds 75% out of Barry Berhad's ordinary shares. which also means that it is more than half of the voting rights. Thus, the relationship between Lili Berhad and Ferry Berhad as at the date of 1st July 2014 are as parent and subsidiary. After the rights were being issued, Barry Berhad's share capital rises up to 1,120,000 shares. But Lili Berhad still holds 600,000 out of those shares, which means that Lili Berhad now holds 53.57%. But it is still more than half of the voting rights. Thus, the relationship between Lili Berhad and Barry Berhad, even after the rights issue, still maintained as parent and subsidiary. Calculate the amount of goodwill on acquisition. As you can see here, the consideration transferred is 1.8 million ringgit, and the NCI is 400,000 ringgit. You can see the calculation here. But it is reduced by the fair value of Barry Berhad as at the date of acquisition of 1.6 million ringgit. Thus, the goodwill is 600,000 ringgit. C. Calculate the gain or loss arising from not retaining the same percentage of interest in Barry Berhad. So here, before the rights were being issued, there were 5 million ringgit of fair value of net assets of Barry Berhad. Out of 5 million ringgit, Lili Berhad holds 75%, which means Lili Berhad holds 3,750,000 ringgit. After the rights were being issued, the share capital rises up to 1,120,000 shares, plus 5 million from the initial fair value of the net assets. This is equivalent to 3.2 million ringgit. Out of this amount, Lili Berhad now holds 53.57%, which is equivalent to 1,714,000 ringgit 240. Thus, the amount of after is being reduced by the amount of before, and you will get the decrease in share of net assets of 2,035,000 ringgit 760. And because Lili Berhad sold the rights to other parties for 50 cents for each rights, then there is proceed from sale of rights equivalent to 120,000 ringgit. Thus, there is a loss on disposal taken to equity amounting to 1,900,015 ringgit 760. D. Initially, Lili Berhad held 75%, which I mentioned earlier how it was derived. And after the private placement, the number of issued shares of Barry Berhad would be 1,250,000 of shares. This is because earlier Barry Berhad has 800,000 of shares, and now since Barry Berhad made a private placement, the shares are increased by 450,000 of shares. And now Barry Berhad has 1,250,000 shares. So out of this amount, Lili Berhad still holds 600,000 of shares, which means Lili Berhad holds 48%, making Barry Berhad an associate and no more as a subsidiary. The effect of the private placement in the consolidated financial statement can be seen as follows. As you can see, the fair value of shares held post disposal is 600,000 ringgit times by 7 ringgit, which was mentioned in the question, that Barry Berhad's share price stabilized at 7 ringgit per share, equivalent to 4,200,000 ringgit. And then there is a proportionate share of net assets before a placement, 5 million ringgit. Out of 5 million ringgit, Lili Berhad only holds 75%, which is equivalent to 3,750,000 ringgit. And then the goodwill that I calculated earlier was 600,000 ringgit. Thus, the fair value is reduced by the proportionate share and is reduced by the goodwill, and hence the amount of loss that will be calculated to statement of profit or loss, equivalent to 150,000 ringgit. 150,000 ringgit will be recorded as loss on disposal in the consolidated statement of profit or loss of Lili Berhad. Thank you.
As for the question 4, on 1 October 2017, The relationship between Aisha Berhad and Adam Berhad is as associate because Aisha Berhad only acquired 40% of Adam Berhad ordinary share and it is below the required of percentage of voting rights. Investor does not have any control over the investing. Aisha Berhad also acquired 50% of Adam Berhad convertible debentures that increase in interest Adam Berhad by 20% if converted. As 31 December 2017, there is no debenture have been converted. Aisha Berhad and Adam Berhad remain associated as at 31 December 2017. In other situations where the debentures are converted into ordinary share, Aisha Berhad interest in Adam Berhad will increase by 25% and its interest will become 65% and is more than half of the voting rights. As at 31 December 2017, relationship between Aisha Berhad and Adam Berhad is a parent and subsidiary. Hence, Aisha Berhad is said to have control over Adam Berhad. That's all from us. Thank you for sacrificing your time to watching our presentation. We hope that you can gain valuable knowledge from our presentation. Thank you.